afternoon from Los Angeles, and welcome to Stock Market Today, sponsored by Interactive Brokers. On the show, we're going to be taking a look at Walmart and Cisco moving in opposite directions on their quarterly earnings reports. And we're also going to take a look at Dunkin Brands, some nice technical action there. But first, let's take a look at the major indexes. It's Alyssa Corum here with Ed Carson. And Ed, it was a bit of a roller coaster ride in today's session. We thought things were starting out good, then we went into negative territory there for a while. The NASDAQ finished down just a hair, but the S&P 500 and Dow finished solidly in positive territory. So what do you make of today's action?
Yeah, I mean, the market was searching for direction. I mean, the Treasury yield ended up not being inverted like it was in some of these other days, but the yields came down sharply nonetheless. The S&P 500, which we're looking at here, intraday came very close to undercutting the August 5th low, which would have wiped out that rally, with the confirmed rally. But, it did rally, it turned positive. There was mixed China news headlines. China says basically vowing to retaliate against the new Trump tariffs, but then saying, hey, maybe we'd like you to meet halfway. Walmart earnings came in, so there's a lot of things. The pre-market was a lot wilder than the regular session, but it was still up and down. And so it's not a whole lot to make of it. If we start rallying here, everybody's going to forget about today. And if we go down, then it's just like we're going to undercut those lows pretty soon. Yeah,
well, everyone's on the edge of their seats, I think. So as the market continues to search for direction, we will continue to analyze that and let you know when conditions do change. But let's take a look at Walmart. You mentioned Walmart, Ed, rising on its earnings report. It gained over 6% today. Strong e-commerce growth, and Walmart also raised its guidance, so it retook a key technical level here today.
Yeah, I mean, Walmart had actually closed in buy range. I mean, it actually come back from quite a sort of extended, but yeah, it punched above its 50-day line. You can see that sort of the red-orange line there, and it was nice action now back out of a buy zone technically there. So it was positive 37% e-commerce growth in the U.S. at its Walmart locations. I mean, that's doing a lot better than Amazon, actually. So it was nice. It's a big contrast to Macy's and Tapestry and a lot of these other retailers. I mean, it's a tough environment, but Walmart's doing relatively well.
And I think, as you mentioned, it really has been holding up to that threat from Amazon. And there are so many things now that you can buy through Walmart online really quickly that you wouldn't necessarily associate with being, Walmart discount type stuff. They're offering a lot of products.
Yes, they are.
All right, and now let's take a look at Cisco, a very different looking chart here with Cisco plunging to its lowest levels since February, extending its losses after undercutting the 200-day line in yesterday's session, finishing the day down almost 9%. It narrowly topped quarterly views, but the guidance, because of all the China stuff, investors not liking the look of that.
Yeah, pretty big earnings guidance miss. And, sometimes the stock will be acting well and it'll surprise you with earnings. Well, this one was not acting well. I mean, the stock had been coming down, broke through the 200-day line. It was not acting well. Investors should have been getting out of the stock a long time ago.
Right.
But, in any case, it's a negative sign because this is a big tech infrastructure and like a sign of tech spending. As you said, China is going to be a source of weakness. That's a big reason why they cut their outlook. So this could be bad for a lot of other infrastructure networking type companies.
Right, yeah, and in the investing strategies show this week, I spoke to Global X about why software has been such a standout within technology, and he was pointing out, which it really makes sense, is that a lot of these hardware tech companies are getting hit by the trade war. So in software, it doesn't have that same type of exposure. But anyway, let's also take a look at Dunkin Brands. The ticker there is DNKN. And Dunkin is showing some nice relative strength, and investors should be looking for stocks that are showing strength amid market volatility.
Yeah, there's a lot of restaurant stocks that are doing well, in this thing. The relative strength line, the blue line, hitting a new high before the stock. It's really got a tasty looking chart here. The stock actually touched its buy point of 83.32, backed off that, still had a solid gain. And, it's just a situation that's really great. But on the other flip side, earnings a little less filling. I mean, the earnings growth has been slowing. They're expected to fall in the next quarter and not much growth in the next couple of years. To be honest, some restaurant stocks like McDonald's or Shake Shack. I mean, their earnings aren't great, and yet the stocks are still doing really well. Wendy's is close to a buy point. Chipotle has been doing great. So, I mean, some of them do have strong growth and some do not. But so it's something to be watching out. But they're working.
Yeah. Yeah, I mean, ideally, we want to see those strong fundamentals in addition to that strong chart action and, sales growth in the low single digits here. Earnings growth, a couple quarters ago was as high as 70%, but that has slowed to just 12% in the most recent quarter. And on an annual standpoint, expected to be in the, low to mid single digits as well. But when you're assessing stocks to buy, it doesn't have to necessarily have, check off all of the boxes, but ideally it does, but it definitely does have a strong chart here.
Yeah, and it's just like, but be aware of it. And be aware that is an issue, that some stocks are just almost absolutely across the board, and some have some flaws, and this is one that has some flaws.
All right, well, we'll definitely be keeping an eye on that one, but we do want to let you know before we go that we have a new episode of our Investing with IBD podcast out now. We have a new episode every Thursday, so make sure you're going to investors.com/podcast for that. This week's guest was Amy Smith, and she talked about how to become a black belt investor, some key tips and lessons for investors of all types. Good reminders there, so make sure to check that out. And I did mention our investing strategies show, so if you have not seen that yet, you can go to investors.com/investing strategies. It's another good one, and we have more coming up next week, new shows every Monday. All right, everyone, thanks so much for joining us, and we'll see you right back here tomorrow.